So looking at this here, we have the chart pattern. In this lesson, we had yet another weapon, chart pattern. All right. So chart pattern is a very powerful is one of the very powerful tools on the market. It's just like the Fibonacci tools when we talk about Fibonacci tools. It's also one of the this strategy you don't want to joke with. The Fibonacci. Now these three things you don't want to joke with them: the candlesticks, the Fibonacci, the chart pattern. Even if you don't understand much of resistance, support and resistance, don't joke with chart pattern. All right. But it's very good when you understand support and resistance as well, because support and resistance tends to tell you that, oh, price is now approaching support. I shouldn't be on a trade. All right. So now you take these four things serious: support and resistance, the chart pattern, the candlesticks pattern, and Fibonacci trading. Now, if you are able to master these four things I just mentioned very well, I see no reason why I shouldn't be a good trader. All right. Now let's go into the details. So the first one here is the double top. So let's start from the double top. Very simple. Just from the name itself, double top. It means there was a top, there was another top. Now the top then was double top confirmed. Okay, yes, there should be a reversal in the market, right? So yes, and other chart pattern also going to be hard is the triple top and the triple bottom. So under this chart pattern video, you're actually going under the chart pattern course alone, you're actually going to see 15 different videos explaining each of the chart patterns in details. 15 different videos. Now, how do we trade double top? Very simple. Now, I'm not going to be explaining much in this PDF format. I'm going to go into a live chat that way you attempt to understand better, because there are some secrets I'll also be explaining that is not in this PDF when it comes to chart pattern. All right. Now, in the double top, we have one top here, we have the second one here. So this was the first top. All right. This is another top. We have something here. It's called what? The neckline. That's your neckline. Now, this neckline, what it does is when price was going up, right? When price was coming up, it gets here, it came back down here, then went up, it came down, that's it, that same level went up, then it's coming again. Now, this point here, we always see that, okay, here, this is the point where the market is always trying to reject. So what you just do there, you just what? Draw a little zone there. Draw a little zone there. You don't want to use just a line. So once you draw a little zone there, like this, so what you want to wait for is, we want to wait for price to come below this neckline. We want to trade the bounce off or the retest. See, there are two things that can happen. Is that we see a bounce off or the retest. Now, the bounce off in the sense that as price is coming down, this red candle that is coming here, now let's say the candlestick closes below it as an engulfing. That is a bounce off. That's the candle closes below it as an engulfing. Or we have this kind of rejecting candle that has wicks. This particular one that has wicks come here, and we could see these wicks. Then this candle end up closing. It means it's bounced off it. Then we want to go short, then put our stop loss around here, then we go down. Right? So it's either you wait for the now we can also have something like this, a coming down, kind of a retest. Then once we see another candle about red going again, we wait for the first red, on that one to close, then we get into the trade. That's a break and retest. So there are three scenarios you can use to enter. I mean, two scenarios: the bounce off and the break and retest. All right. So now let's go into the let's see the next. All right, so let's see the next one. So you can see this is what I'm trying to explain here the other time. So you can see here, if looking at this chart pattern now, let's say this is on the 4 hours time frame. All right, this is 4 hours time frame. So we will see this was the top, this and that top. Now the secret of chart pattern is you calculate the pips from the top to the neckline, just duplicate it and break it down. Price is going to also move in similar pips when it breaks out. All right. So looking at this point here, this price what break out of here, then this one closes out of it. You see this red candle here. Let's say this was a 4 hour time frame, and you can see that this red candle just going. What you can just do is try to go low to maybe 1 hour or 30 minutes time frame. That's, let's say this was a 4 hours time frame. All right, this was a 4 hours time frame. What you just do is go low to 30 minutes or what, or the 1 hour time frame. You actually see something like a rejection, price coming to tell space and rejecting from the 1 hour time frame. Then you can use that as your entry. So that gives you a clearer picture. So once you use that as your entry, you just just put one line here, measure from here to here, then just put it down after the neckline. Then that should be your target, and that is it. Yes, that is it. That's just the way I trade chart pattern on my own, chart pattern on my the double top and the double bottom on my own. So this is a top. So you just the inverse for the bottom as well. So you just the inverse. So you can see this is the bottom. It just the inverse. So same thing happened there. So and now looking at this inverse, very good. You can see that on the 4 hour time frame, this is what I'm trying to explain as the bounce off. All right. So like I was saying, don't use just a line, use a zone. So now I put in a zone there. So what you notice is you have one bottom here, you have the second bottom here. Now when price broke through in this kind of scenario, now price broke through, right? Break outside of it. But the way this candlestick close does not close as that of the red one, all right? Now we have this candlestick coming back here. Coming back here. Now this is a break and a retest. A break and a retest. This is the retest. So immediately you see that price is going again, you can see that it's rejecting off it, that is bouncing up already. So as of the time it's outside of around this region, you can now go to the 1 hour time frame. The candlestick on the 1 hour time frame will have closed. So once you see that it close as a green candle, use that as your entry, put your stop loss somewhere around here, then target to the next point. All right. So that's just this is what I'm trying to explain as break and retest. Now on the forward, this is a break and retest. At the same time, it's also the bounce off. So this is what I'm trying to explain on the other one. So once you see a chart pattern like this, and you can see that it has breaking the neckline, just go to the lower time frame, the time frame lower than that one. You will see a candlestick that will close and give you the confirmation. That will make your stop loss more smaller, right? So if I'm to wait for this candlestick as confirmation, it means I'll get in here, my stop loss will be here. Now my stop loss will be bigger. So what I'll just once I see the price already around here, I'll just go to like 1 hour time frame, wait for that 1 hour candlestick to close. Once I see that it's closed very well, then I use it as my entry, then go for the next target. Let's say this is a daily time frame, all right? Let's say this was a daily time frame. Price came here like this. I will just go what to the 4 hour time frame, wait for the 4 hour candlestick to close, use it as my entry, my stop loss here, then go for my target. That's just the way I trade it. That's where you see me having a risk reward of 1 to 5, 1 to 6. Just because I actually analyze on the higher time frame, then I come to the lower time frame to execute the trade. All right. So that's you also use it in any chart pattern. I'm going to be explaining as well. So that's the double bottom and the double top just being explained. You wait for the neckline to be broken before you enter the trade. That's just the information there. You can see this one top, this second top. You will see that price broke to it. Then you see this. Now if I'm to draw this zone here, so you will see that this is a what? A break and retest. Very good. See, you can see it one top, second top, then it breaks it. Then what came back for the retest? Came back for the retest. Then you see this candlestick. It's called the shooting star. And you know what the shooting star is? It's confirmed to you a selling count. This is a single candlestick pattern. This one, shooting star, this particular red one. And when it came, what did this confirm to us? We should what? We should go short. Then we go short from here. We put our stop loss below here and above here. Then we what? We target. If I'm to duplicate this, our target will just be around this area here. Yes. If I'm to duplicate, if I'm to measure from here to this neckline here, so from my entry to here, this will be my first target. But I can analyze further and be like, okay, there's other support and other resistance level. Let's say I have 2 positions open, or let's say I even have just 1 position open. What I'll do is I'll just once price gets here, I'll move my stop loss from this all this top here all the way to this point here where I will see some consolidation. I put my stop loss there, then wait for the market to do what it wants to do. And that's the way I trade it sometimes. So that is for double bottom and the double top. So same way I've explained the double top now, just invert it. Invert it, same thing for the bottom. So we could see we explain the bottom here, we explain the top at the other side. So it tells the same thing. Now let's go straight to the head and shoulder pattern, all right? Head and shoulder pattern. Most of the time, looking at my chart, you always see this one. Like this one do come often most of the time. And like I said, I told you earlier, if I want to draw my neckline, I'm not going to be using just a line. I'm going to be using a zone, all right? Now, I'm not going to be using these tools will not allow me to draw my zone very well. But at the same time, I'm going to use it. All right, so that's the zone. All right, looking at it as in my zone, that's my zone. So here is price was coming, get to this point, bounce up, then we create a new higher high, and immediately price drop off, taking out this low, taking out this low. So what you want to do is now this head and shoulder pattern. I'm also going to teach you another strategy you can combine with this head and shoulder pattern that you can what you can even get in even before the neckline is being broken. I used to do that very well. You get in even before the neckline is broken. It's very simple. Now this is a strategy I want to teach you. Now I'm going to plug this here. But I see what I just did there. Right? I will look at the last weeks of this place. I'll mark it out and drag it forward. All right, the weeks. Now, sometimes I'm going to use the last weeks and where the body closed like this. Yes, so exactly this is how to do it. I will mark all the wicks on the body. The last candlestick I've seen the body. This is the last candlestick I've seen the body. So this was the left shoulder. Then price came, created a new higher high. Then immediately went down. You see that sometimes when price come, it's either it creates a same base here or go below it then come back up here. Now if it's created same base here, we have a straight neckline. But if you come below it, we have a slant neckline. So you just did the same thing. So what I'm going to do is immediately price is coming back inside of here, all right? Immediately price is coming back inside of here. I know it's kind of coming for his left shoulder. What I'm going to do is this last candlestick close, all right? I'm going to put immediately price get there. I'm going to what? Let's say I want to trade this. I'm not close to where my chart is, or let me say I'm busy doing other things, but I don't want to miss this setup. What I'll do is I'll just set a pending order here, put my stop loss above here. I'll make my stop loss be the same line with this guy here, then put a pending order here, put my stop loss here, then target this next base here. All right, I'll target this bottom here. So what I'll just do is put my pending order here, put stop loss here, put target here. You will see price came down there, get to the neckline. So now at this neckline, I'll take some profits. Now this is a very simple strategy I'm trying to explain to you. So at this neckline, I'll take some profit. Let's say I have two positions open or one position. What I'll do is let's say I have like 0.1 position open on this trade. I will take partial profit of 0.05, then I'll be left with 0.05. Then I'll now move the stop loss to somewhere around here. You can see that this is like a base here, right? I'll move my stop loss somewhere around here. Then once price now break and retest it, then I'll now add my 0.005 back again and continue with the trade. That's the way I trade. Now this pattern here, this what I just explained here, is called the QM pattern. That's cost mode pattern. Cost mode pattern. There's getting in at the left shoulder. It's a very simple strategy. Getting in at the left shoulder. So this is a cost mode pattern. All right. So let's see how that one plays out. So you will see this is exactly what I'm explaining. So getting in from here, I take some profits here. Now look at what I was explaining there. I said I'll put my stop loss below this way because I could see some consolidation here, right? I said I'll put my stop loss here. You can see when market came here, it didn't hit me out. Now I've still had my 0.05 open. Then immediately price came down back here and closed. So I will go to the 1 hour time frame and look for why this big red candle was forming. Go to the 1 hour. Let's say this 4 hour. I'll go to 1 hour, wait for that first 1 hour red candle to close. Then I'll get in without my 0.01 again. Now I will have open position on this trade of 0.015, which means the profit I make from here, from this one to this point, will now be what I'll be risking for this new trade I just opened. I hope you get the point. The profit I make from this point to this point will now be the risk from here to here. It means even if this trade has to come against me, I'm going to come out break even, not gaining, not losing anything. It's just a very simple strategy I just explained. So sometimes I don't wait for the neckline. Once I confirm, oh, this is a clear element shoulder, then I get in the trade. You just put my target here. That's when you used to see me having two target level. If you have noticed some of these things on my chart, I'll put something like a green line around this area. I'll just drop a green line. That green line you're always seeing on my chart means my first level target. That green line means a target. So I'll just drop a green line here. Boom. Once price gets to that green line, some of my position is closed already. Then I'll wait for it to continue. So and if it's not continue and come back, I'm still going to get money. But once it come here and come below you test it, then I'm still going to make money. I'm still going to show you example of when I go to lecture, you're going to see those lines on my chart. All right. So that's the head and shoulder pattern. So as same as the inverted and shoulder. So you can see that this is the inverted and shoulder. You can see that this one we have a straight neckline. We have a straight neckline. So you can see straight, not like on that one that was slant. So same thing I was explaining here. Now let me explain it. I told you I'll be using the body, right? I'll be using the body, last body close here. The reason why I used to use the body here is now let me explain. Let me try and see if it's happening here. Okay, this was a nice one. Sometimes price might just come to touch that body and run off. So that's the reason why I used to use the body. I don't wait for it to touch the wicks. But in this scenario, it's always coming for the wicks. All right. Now look at what I'm saying here. Look at what I'm saying here. So let me say I'm using this. So let me say I'm using this wicks here as my target. All right. No, I didn't do it very well. No, I didn't do it very well. Okay, good. So let's say you see the price did tap me in and went. So that's why I like using the body. The last place I could see the body, so you can see this is a body here, this is a body here. So once I use this body as my, I'll just make sure my surplus is big enough to accommodate it. Anything that makes price come back to this stop, then the trade is invalid. All right. Anything that makes price come back to this stop, that's why I always put my stop loss straight line with this one. Anything that makes come back, then the trade is invalid. So why it's here, tap me in from here. From this bottom, it tap me in. First went in loss, then go in profit. By here, I'll be making nothing less than 1 to 2 weeks on my trade. All right. So that's the way I trade head and shoulder pattern sometimes. So you can see it, see how it plays out nicely. That's head and shoulder. We explain the double top, bottom. So in the next video, we want to talk. We'll also be going to be covering the next remaining topic, which is the rising wage, the falling wage, and the other ones. So for now, bye for now. Let's go to a live chat and let me show you an example of double bottom, double top, head, and inverse head and shoulder pattern. And I see you in the next video.